Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 11, the short exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And before I jump to the exercise, if you watched the previous exercise, short exercise 11-10, you saw in there my explanation of where we're going as far as learning how to put together the statement of cash flows. We are at the point where you're going to need to derive the figures for yourself. In other words, you're going to be given the data and you're going to have to figure out what the figures are. And that's where this idea of understanding the concepts come into play. Up to now, you've learned what you needed to learn as far as concepts are concerned in order to be able to generate the statement of cash flows. You're not learning something new. All you're doing is just learning how to manipulate the information in order to present it on a statement of cash flows. So if you don't understand concepts that you should have learned up to this point in time, you're going to be making mistakes. So as you go forward, if you're struggling with a particular concept, go back and revisit it, because you have to be able to put that in, get that down in order to create the statement of cash flows. It's sort of like, having nested information. If you make a mistake in the nesting of information, then it doesn't, the first step or two, you're dead in the water for the rest of the problem, because you didn't get that initial concept down. And this is kind of where we're at right now as far as the statement of cash flows, right? So if you're going through this and you're struggling with some of these here concepts, again, go back and revisit them in the textbook, or telephone and speak with an instructor to help you plug up the leaks in your thinking so that you can get it right. Because if you don't get the concept right, you can't get the number right, you can't create the statement of cash flows the right way. All right, so 11-11, balance sheet income statement, and it says calculate certain investing and financial information from the financial statements. Right, use the data from 11-10 to compute the amount of the assets acquired by Inland Medical Supply, assuming Inland sold no fixed assets in 2014. So I've just reproduced that information here. Now, we are looking for compute the amount of fixed assets acquired by Inland Medical Supply. Right. All right, so where's our fixed assets? Here we go. All right, so again, using T accounts for this kind of work is very beneficial. So I'm just going to call this fixed assets. Right. And we start out with a balance of 180. And we have an ending balance of 226. And if you watched the last video, you know that you don't just take the difference between the two. All right. The reason why is because when you're thinking about fixed assets, what do we have to also take into consideration? We have to take into consideration depreciation. Okay. So if we look at our income statement, we see we have a depreciation expense of 61. All right. So remember, if we buy, okay, and here's the concept. We buy the asset, so we're going to debit the asset and credit our cash, or however we're going to pay for it. Note payable, whatever. Okay. We have this asset on our books, and then what do we have to do? Well, we're going to depreciate it, right? And when we depreciate it, we're going to debit our depreciation expense, and we're going to credit our accumulated depreciation. When we make that journal entry and we post it, that gives us the debit to that particular fixed asset account. I'm sorry, that gives us the credit to that particular account. It's accumulated depreciation, right? I mean, this could be broken out into two separate accounts. I can have the fixed asset here, and then I can have the accumulated depreciation here, but I don't need to, all right, because what am I doing? I'm thinking about in a totality. I'm thinking about the book value of that particular asset. So we're grabbing the $61,000 from the depreciation expense, right, which would have been a credit to accumulated depreciation, and that's our 61 there. So we want to know compute the amount of fixed assets acquired, right? Well, again, you can't just take one from the other. You can't take this number less this number and come up with that. You have to consider how much depreciation was applied, and then it's just a matter of, here you have 2 out of 3, 3 out of 4 numbers. You're able to figure out the fourth, and so we start out with the 180,000, okay, and then we subtract the 61, okay, and then we need to add back in whatever that amount is, and that's going to equal the 226. Okay, so that's in a formula form. So let's do the math. 180 less 61 gives us 919, and if I have 226, okay, and I subtract the 119, that ends up with 107. Right? So that amount for the fixed asset is 107. Okay, and that's how much was acquired. As a double check, go ahead and add the 180 plus the 107, 782, and then subtract out the 61, 622, and that should be the balance in the account. Okay, right, so I'm going to pause the video here, and well, actually I'm going to stop the video here and go on to the next exercise in the next video. All right. Again, if you don't understand the concepts here, go back and revisit, this idea of accumulated depreciation against fixed assets if you have to. And if you're still not getting it, then feel free to contact an instructor.